We have today a guest, Mr. Madhusudhan Gad, who is basically the founder founder and financial freedom coach of Fortuna Connect, which is basically a one-stop solution for all investment purpose. Mr. Madhusudhan, along with his team of 7 team members, he runs the company based out of Bangalore. It's a basically asset management company. They handle over 150 crores worth of money of about 1200 plus clients across India. Uh, we are very fortunate to have Madhusudhan today on our show, who will be taking us through a lot of important aspect of career guidance and career planning, which is financial planning. Before we start the conversation, though, I would like to add few more points about Mr. Madhusudhan. In fact, Madhusudhan and we studied together in the same college from Ambedkar Institute of Technology. We have passed out of mechanical batch 1996. Madhusudhan has moved on from mechanical engineering to into this field of financial planning, and after spending 22 years in construction equipment industry, I have moved on to the career mentoring, career guidance, and overseas education consulting. Also, Madhu has been awarded a number of awards, including that of $1 Million Roundtable Award, Quote of the Table Award. He's also a certified from LIMRA, USA, as a professional financial advisor. Mr. Madhusudhan has traveled over 30 countries across the world and received various awards and qualifications. It's a great honor to have Madhu with us. Thank you for taking out your time and joining us. And I'm sure today's session will help our viewers, primarily the parents with their young children at various levels, will be able to understand more about the importance of financial planning. And so without taking much time, I will dive into the different important questions which parents might have. So before that, Mr. Madhusudhan, would you like to say hello to our viewers and say briefly about Fortuna Connect?
Yeah, thank you, Siba, and it's been a great pleasure. Thank you for having me on this program, and it's my privilege because I get to share a lot of insights from my field, from my experience, and thank you for this opportunity. Yes, I'll just introduce my company. I mean, Fortuna Connect is a 20-year-old firm, and we have a team of 7, and been managing over 150 assets under management, 150 crores assets under management, and we have over 1,200 clients. Just Siva just mentioned. So it's so we have been catering more than 500 families to live life comfortably and peacefully, because when the right strategy and planning is done, most of the people tend to relax, and they find peace because they are outsourcing their financial activity to us, and they are focusing on that area that they are good at. So that's giving them the kind of peace. So that is where we are helping them. So thank you for having me on the show. Thank you.
Great. Um, so when we started discussing about the linkage between career planning and financial planning, uh, I was very clear that for somebody to plan a proper career for their children, I think in today's time it is so important to have the right kind of financial planning also, because the education cost of today and the education cost of say about 2 decades ago, there's a sea change in terms of the costing. Broadly, I can understand. I mean, I am sure most of our listeners and viewers will know the importance of it, but probably they won't be knowing the intricacies of why and how they should go about it. And our conversation today probably should be able to help our viewers and listeners to get more insight into this aspect, which is so important with respect to career planning. And so I would like to start with the first question. So the first question is, can one plan a career well without thinking about financial planning?
Okay. Interesting question because I'll just tell you the trending pattern that's happening in the youngsters today. All right. So most parents over a period of last 20 years, you might have seen that India has been growing, and along with that, many of us have been growing from the middle class to slightly upper middle class nowadays, and most of the families are seeing some money in the form of for a good lifestyle nowadays. Okay. In our early days in our childhood, we hardly used to get to see any comfort. Today we are slowly getting into that level. So what happens is all the considering the EMI that we had to pay, and considering the college school educations being expensive, most parents did not plan or anticipate that they would send their kids to for masters for abroad. And you and I know that the masters expenses are not that easy. It goes anywhere between 20 to 40 lakhs to 60 lakhs and on for even a 2-year course. So inevitably the only easiest solution is education loan. And at the moment they enter the masters, they are already thrust upon the education loan, and they complete the masters and they come out uh, getting a job, and in that job they start their first EMI. And during our days, as we were told, with your first job, start your first savings. But here we are going in a one step behind. Start your first EMI types. By the time they complete their EMIs and loans of the education, it is 3 4 years. And the moment they are there, they are free. They feel that they were bounded by something, bounded by the commitments, so they are free. So they go on spend thrift. They don't know what not to buy, what to buy. They buy fridge, AC, car, house, everything. And their credit card are crunched up and they're loaded. Their interest payments, they don't know when to pay. They just go on by interest after interest, fines after fines keep adding. And by the time they have get married, have family, and everything, and then they realize the seriousness of their thing, and they somehow manage to clear that loan, the credit cards, and then at 33 they are saying that they are starting the life from there from scratch. They of course have the EMI, most of the interest. So by the time they start saving and pile up and realize and all those things, so we are getting into a vicious cycle of making sure we create the culture of loans first than the savings. While it is good, it's important to have loans, but is it required to have a there's an youngster whom I know, his salary is 1 lakh a month, 60,000 goes towards home loan EMI. I'll leave to the imagination of all of us what kind of a life will that person lead. 30,000 monthly household expenses that is there, and hardly gets his 10,000 rupees. So that is, and during, and that loan goes to next 15 20 years, and so the prime age from 30 to 45, when we can roam around, freak around, enjoy, that is when we are binded by loans and all those things. So if we have a good career planning, I mean like financial planning, then career planning automatically falls in place. So,
Very well.
and one additional point to mention here is, many people buy a house first, not realizing that eventually their career revolves around the house. Okay, if I get a job in another city, I'll think twice because I have a house here. If I have a job in other part of the city, I might decline, though the offer might be good, the company might be good, because my house is here. So how right it is.
So I think it's so important. I think first to set the right kind of priorities depending on the age and depending on the situation. I think setting the right kind of priority is so important, and that has got a direct implication on your career, starting from your education till your mid career. I think that's so crucial. And you rightly mentioned the time when we should be actually free and exploring the world, we are bound by the EMIs and other liabilities. Yeah, so very well said. And I think our viewers should be able to think about it and really take the necessary steps in the right direction. So coming to the next one, so how do you approach financial planning for your clients? I mean, what are the different steps you go by in terms of explaining or going about how you go about for your clients in terms of financial planning?
Okay, so we compartmentalize the goals of customers, right? So when we meet them, we create three, four departments. That is, one is building the emergency corpus, kids education, even house, which are house and vacation are the aspirational goals, retirement. And I mean, look, the foundation of all will be the income, the protection of the income for life and health insurance. So we disintegrate and tell. So while doing that, what happens is, if I have to many of us, what we do is we generalize all our savings and keep it in one bank or somewhere, not realizing what it is used for. But when tomorrow, when a customer of mine comes and says that I want to build a house, I will say, do not touch the money that is kept for your vacation, for your children's education, for retirement. Okay, does it mean that you may have to delay buying a house for 2 years? So be it doesn't matter, right? Because there are other funds that we'll miss out if we get into the house commitment. So how much difference does it make if I buy a house at 35 or 37? It doesn't make much difference. But yeah, I mean, at 35, if I don't go on that vacation with my loved ones, if I don't compound, allow them my money to compound for my daughter's education or a son's education, then I might piece out some critical and make that mistake. So there are only two solutions, right? One is save and earn interest, right? Or you save every month and you earn interest, or pay interest.
Absolutely.
The education loan you take, you pay interest. So the choice is yours.
Very well said.
Mm.
So the
And
approach is, yeah, go ahead, go ahead.
so there is one more thing, right? So most of the people they do is, there are the point is that the house. I mean, even just to add that on the house part, it's important. Buying a house is an emotional decision, and everybody should fulfill their emotional requirements. But if I buy a house at 30, what happens is I will buy based on my affordability of maybe 40 lakhs, 50 lakhs, 60 lakhs. That's the kind of house I could buy, which is a two-bedroom house. Me and my wife are there. We say we enjoy. But 5 years, 10 years down the line, fast forward, and you see, then I have two kids. My parents are old. They come and stay with me. The two-bedroom apartment is absolutely insufficient, and I've moved up on my ladder, so that area and that locality may not be there. Inevitably, I've seen people buying a bigger house, three bedroom, four bedroom, at the age of 40. So instead of that, try and save, have fun in the life, and directly buy a good villa at 40 and save, and your down payments and the EMIs might be half of what it is if you can just do a small planning. So this has been my experience, and people who have taken my route have been blissfully comfortable with less of EMI and more of peace.
Fantastic. I think this is absolutely a path-breaking, difference in how we approached, or many people. I think most of our listeners and viewers probably have approached, but at least these are some very, very path-breaking ideas which you're sharing. I'm sure one to one, of course, you will be able to give the right solution to them. So all your details we'll try to share on the show notes so that people who would like to take a specific advice from you, they can directly contact you. But broadly, the direction what you're giving, I think that's so important because it's actually trying to break the monotonous ideas of the past, and it is trying to break the shackle of the past and trying to show what is right at this moment. So that's a very good point. Now, I know inflation is something which I think we all read about on newspapers, So what exactly is the inflation and how it is impacting the financial planning? Can you explain a little more about this to our listeners?
Yeah, inflation, the word is something that we keep hearing in the papers. You're right on, bang on that, but we don't have a relative meaning to it. Okay, when I say relative meaning, I'll give a small examples. Most places when we see, they say India's inflation is at 7%, 7.5%, and those are the numbers. Yeah, that's a generic number, but each household has their own inflation. All right, the kind of spending we do are totally different, and in fact, there are four inflations that are at a much higher, starting from lifestyle inflation, which is at 14%. um, and that is basically our household lifestyles. Second is education inflation, and I don't have to tell you anything. Your school fees and your college fees and today's your kids school and college fees, you can relate to it. I mean, we did not even imagine that the whole college expenses or a whole school expenses will be 1 years of my baby's school fees. That's the kind of it has gone. So that is running at 12 to 14. Medical inflation is increasing at a double digit, and food inflation. Okay, we don't realize that, but the kind of food that we eat today, one order from a Swiggy and Zomato, you know what the bill will be, and you'll be shocked at what prices that comes at. So those are at 12 to 14%. That has been the trending. And if we, I mean, historically we have been saving in a conventional methodology, right? Like, the most favorite places where we do is the bank FDs and PPFs and employee provident fund, and typically the savings, like, all have been growing at anywhere between 5 to 7%. And inflation is at 12 to 14. We need to think that we'll be big time short of what we require in terms of money. I don't know whether this is a good share in during this time, but I'll share with you. There was a senior citizen who had come to me at the age of 62, saying that I want to save money, and I suggested him some of the uh, trending plans. Okay, I wouldn't say it's a new plan; it's a trending, and it's been there for 3 4 years. I suggested them, and I identified their requirement and suggested some requirement, but they were apprehensive, and they went back to their conventional way of saving, that is FDs and post offices. And during that time, about 7 years back, it was giving about 8.5, and they were happy about it, and they said we'll go by our own methodology. And they felt, because they wanted a guarantee, which it's not always, and liquidity, both were not something that is acceptable in both scenarios, so they chose. After 7 years, they called me again. This time they were worried, because from that money that they had a corpus, they were getting 62,000 rupees monthly income 7 years back. They were happy, blissful. Now, after 7 years, interest rates has fallen down to 6% and 5% respectively. When they go back to renew their same savings, the monthly income they getting it 41,000. After 7 years, when all the menus in the hotel, the petrol rates have increased. I mean, I don't have to tell the numbers because everybody knows it. The monthly income has fallen by close to 30% or 35%. Imagine the situation of those people, and many in India. So this is called as interest rate risk. So many are getting into the trap, and the interest rates are not even beating the basic inflation. Forget the lifestyle inflation or any other inflation that we just mentioned. So that's scary.
Yeah, I think this is really sounding scary. In fact, I mean, related to that, can you explain what are the basic or the traps or mistakes which normally people do while doing their financial planning?
So when I say traps, each level of set of people have their own different style of traps. Okay, there are when I say, okay, during 20s, and I'm sure I and that many 20-year-olds do not save any money. Okay, they do not invest, they do not even plan for retirement. With every first income, we recommend people to start their own retirement planning. So many don't do. even in 30s, when they have family and married and kids, when responsibility gets sinks into their mind, they want to save, but their best approach would be to meet their finance guru, their friend, relative, uncle, aunt, their family members. They ask them for advice, guidance. I mean, most of them will go back and tell their conventional way of saving and not the new age solutions, because they know only that. So they don't really come to a professional to ask how to. So what happens is they tell something and they say, okay, invest in post office or a bank or buy gold, and that's about it. And they do that, and the rest of the money, we have our Amazons and Flipkarts to distract us from many things. We end up spending and be getting into a higher lifestyle. That is the thing. And 30 to 45, 50 is all about paying EMIs for the house loan, car loan, every loan that we can get. We are getting into that, sacrificing our lifestyle. And 50 years down the line, MNCs say you have worked long enough, and we are thinking, really, do we have to continue taking your services henceforward because you are 50 plus? So that has been the trend. So everybody every day working after 50 is a uh, question mark. In fact, it's a bonus to be said. Okay, so but they come to us. If they come to us at the age of 30s, we'll ask a lot of questions. Okay, we ask, so what kind of growth you want, what goal do you want to what goal you want to fulfill, financial goal, child's education, emergency, and we ask all those things. Okay, and why not 10,000? Why not 10, 20,000? Why 10,000? So we have all such questions which make them think and answer and effectively plan in the right way. And we go a step extra to make sure tomorrow your daughter or a son comes and says, I would like to go to Stanford University or Oxford University, and I would love to become a physician, or I mean engineer, or a master's in anything. Then we help the parents to be prepared for the financial requirements without taking loans. That is where we want them to. So for that, a simple planning is required. And if they don't get to the routine trap, then it makes life easier for them to achieve what they want to. That's where it
Fantastic.
is.
Yeah, that's so very detailed explained by you. In fact, here I would like to add, I'm sure a lot of listeners and viewers who are connected with Madhusudhan, if they need any kind of support in terms of career guidance, mentoring, or overseas education, I think you know where to contact, and you can always reach out to us. Now coming to the next one. So what are the broad categories of financial planning? I mean, when I say broad financial categories, what I exactly mean is, if somebody has 100 rupee as a amount which can be saved, how one should plan, what amount should go and in which box, if I can put it.
Mm, okay, valid question. There is no such a set standard format, because all these financial planning is custom made to each individual, each families, and depending on their inclination to the goal. So, for example, if somebody says, okay, if somebody is earning $100, then I will ask first question is, how much can you keep aside, so that for any of the goals to be met. If they say 40, we will there are certain things that are sanct, no compromise on that. That is to have at least emergency corpus, which is equivalent to 6 months of one's income, right? So if that money is not saved, we will make sure a little extra money goes towards that. Maybe 15 rupees out of the 40 bucks that he is willing to save might go for that. 5,000 rupees might go to securing the families, that is income protection, health insurance, and everything. Companies do give, but those are just the basic ones. So when you want a good quality comprehensive plan, then you better have to comprehensive in terms of coverage, all right, not the not the base minimum one, the quantity in terms of quantity. Okay, so that is one, so that might go. Maybe another 5 or 10 they may want for the children's education, and five maybe they want for retirement, and five may want for their aspiration, maybe for a car or a thing. So some might say, no, 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 we'll delay the retirement by 1 or 2 years, but I would like to have my car first so that I can enjoy it today. So some money might go, retirement planning might take delay. So based on their interest levels, we custom make and give the solution. But yeah, of course, in 2 years back, we come back and say it's high time. At the time, their salary would have increased, so we start the retirement planning. So it's purely custom made, and the plans that we invest will be basically into the trending ones and the growth and the goal. We work as a reverse engineering. Okay, if I need about for many don't realize, but a newborn kid today to a 5-year-old kid today, by the time they come for graduation, they might need anywhere between 50 to 60 lakhs in a normal college. And somebody says, I want to send them to a high tech college, be prepared for a crore worth. So we do a reverse engineering, and this is the kind of money you got to save. And if you want to save at 6%, you need to do 35,000. If you want to save at 8%, you may have to do at 28,000. And if you are willing to take a growth route, then at 12%, you just have to do only about 19,000. And somebody wants really at a 15%, just 12, 13,000 is good enough. So we give them that chart and they get to choose.
Okay. So primarily speaking, you have been your broad products have been to help your clients to invest into different types of mutual funds, or you also help them in other investments also?
Yeah, mutual funds, pension plans, tax-free bonds. Okay, of course, insurance for sure. Mutual funds, all the companies, and there are a lot of NCDs, non-convertible debentures, and what is it called, portfolio management services, alternate investment funds. There are so many solutions that we can offer. Depending on their interest level, we will offer everything.
Fantastic. I think we have actually covered quite a lot of ground today in terms of the discussion, and I'm sure the viewers and listeners will get a lot of value out of this conversation. To get more detailed, more one-to-one solution, I would encourage you to connect with Mr. Madhusudhan. His details will be given in this show note. I'm sure together, together Madhu can provide the financial side of the guidance, and we can provide you with the proper career guidance with respect to what the child needs to take up as a career. So together we can actually give a 360-degree solution for our viewers, and that is our aim. But irrespective of that, I think most important fact is that today the conversation is mainly targeted towards sensitizing each of our young parents and young people. I mean, need not be all of them parents, but some of them may be young professionals who have just got into the profession right now. So take the advice of Mr. Madhusudhan. I think he explained very well about why it is so important to have a proper financial planning. Have a nice, enjoy our conversation, and hopefully you will benefit from it. And thank you once again, Madhusudhan, for being with us. And any
I
closing
have
words?
a few lines. Okay, so when we are good at certain work that we do. So if we outsource the other area that we are not so familiar and focus on what we do best, then life becomes easy because somebody else who is a professional in that field takes care of that. And I'm proud to be here associated with you, knowing from you Siva days to Dr. S.P. Mishra, career spanning of over 20 years, and being in the program along with you is a proud moment for me. So I'm happy to be a part of this, and Yeah, I mean, you're right. So, career planning and career counseling is what you do, and financial planning is what we do. If the uh, end viewers who can take a note and take our services, their life is much easier. So, I can totally vouch for outsourcing our activities with the right people in today's world.
Fantastic. I think so nicely put. And viewers, thank you very much for seeing us or hearing to our podcast in whichever podcast you are listening. And thank you for joining us. Thank you so much.
Thank you.